Let's do well and rewatch each lesson, even the one that are just theory. They were taught because they were important. You get it? So do well to watch them again, because most of them has to do with your psychology, and psychology is so important in this trading business. So do well to go through them and become conversant with them. Before we start today's class, whilst we wait for the rest, if you have any question from the previous meeting, please you can ask your question. If you have any question from the previous meeting, you can unmute yourself and ask the question.
Yes, sir.
Yeah,
Good evening.
evening.
About the previous lesson,
Yeah,
you talk about creating two exit strategy. Is it two exit strategy
no,
and establish of entering that works for you?
creating an entry strategy and an exit strategies. Two
Yeah,
strategies, an entry strategy and an exit strategy.
yeah. So I'm asking, how can we know that this is a valid strategy or entering strategy and exit strategy?
Okay, so as I said, the earlier lessons we are doing is just introducing us to the whole concept. Okay,
Okay.
so we'll be
Okay.
coming to the question you are asking. We'll be coming to those topics. If there's no other uh, question, then we can start. If there's no other question, we can start whilst the others join us. Okay, so we learned a few things. That was last Wednesday. Okay, before I continue, I will be changing the meeting days. Okay, because people complain that they have church service on Wednesdays and Fridays. That's why they are not able to attend the meeting. So from next week, we will change the days from Wednesdays and Fridays to Thursdays and Saturdays. Please, so take note of that. We will change from Wednesdays and Fridays to Thursdays and Saturdays. Please, I hope that is okay with us. Please, is the Thursday and Saturday okay with us? If it is okay with you, type yes in the chat box. Type yes in the chat session if it's okay. Okay, so can see yes, yes, yes. Okay. So next week, so I'll change. I'll make the designer change the days on the flyer. Okay, from Wednesdays and Fridays to Thursdays and Saturdays. All right. So today's lesson is so important. Okay. Today we are going to look at forex trading overview. Okay, we are going to look at the overview of forex trading. We've already looked at the introduction to financial markets, and we also look at how you can develop the ultimate goal to become successful in the forex trading. So today, another important thing that we need to understand is the overview of the entire forex market. All right. So first of all, I know someone will ask, but what is forex at all? You are saying forex trading, forex trading, forex trading. What is it at all? Okay. So in a simple term, forex trading is an act of exchanging one currency for another. Okay. Where an investor buys a currency, he feels will appreciate in value, and sell the currency when he feels it will depreciate in value to earn profit. Okay, so let me admit someone. All right, so one thing you need to understand here is that when we talk about the forex market, we are talking about what? About looking at currencies. Okay, so let's say for instance we have euro and USD. Okay, so for instance here on the screen here, the one you can see here is what? Gold. Let me hide the chart. So what do you see here? XAU USD. So that is gold USD. Right now, this one is not the currency. This gold is a metal. All right, but then I'll still use it to what? To set the example I want to what? I want to set. Okay, I'll use it to set the example I want to set. Now, all I mean is, let's take gold as one currency and the US dollar as another currency. Okay, what is happening here is that, please just a minute. Okay, so what I was trying to say is this. Now, let's say I analyze this gold and US dollar, and I realize that gold is going to appreciate in price, in value. What I will do is that I'm going to what? I'm going to buy gold against the United States dollar. All right. And when I see that the price of gold is going to what? Now depreciate, I will sell the gold back and take the United States dollar. All right. So that is basically what forex trading is. All right. Now we trade currencies in pairs. Okay. So what you are seeing here, this XAUD USD is a paired what asset. Okay, they are pairing gold with the United States dollar. So we trade currencies and most assets in what? In pairs. Unlike when we think synthetics. Okay, for instance, when we come to synthetics here, okay, you realize that here we have what we call volatility what? 25. Let me do it so that it will show on the main chart. Okay, R25 means volatility what? 25. This is an asset that is standing on its own. Okay, it's not paired with maybe US dollar or maybe Canadian dollar or all that. It is standing on its own, but it has its own characteristics, okay, with which it operates. That's why I need to read a little bit about the asset that you are trading. Okay, let me admit others. All right, so here we have a situation where you can have an asset standing on its own but has its own parameters that you either buy based on that, or you will do what? You will sell based on what? On that. Good. So let me come back to the gold. So you can see we are pairing what? Gold with what? US dollar. And if you come here, we can see other. We have the euro against the what? USD also here. So in this case, we are pairing what? Euro with the United States what? Dollar, the US dollar. Okay, so these assets are traded in what? In pairs. So you have to understand that. Now, as I was trade currencies in pairs, with the first currency being the base currency and the second the code currency. Okay, so we call the first currency. So here in this case, the euro is the what? Is the base currency, and the US dollar is what we call the code currency. Let me label them for you to see. So the euro is the what? Is the base currency. So the base currency here is what? Is the euro. and then the USD here is the quote currency. We call it the quote. The quote currency. Okay. All right. Now I explain what the two mean. Okay. What the quote currency, and the base currency means. Now, when we take the quote currency, okay, let me start with the base currency since that's the first currency on the pair. Please, I hope my sound is clear, loud and clear. I hope all of you can hear me very well.
Yes, sir. Very well.
All right, thank you. Okay, now so the base currency is the currency that appears first in a Forex pair quotation. So the Forex pair is called a quotation. That's why I think in the previous video I was telling you that when we get to the lesson where I'll talk about the quotation. So that's what I'm speaking about now. So the quotations are the pairs. Okay. Now the first currency in it is what we call the base currency. The quote currency is the currency that appears second in a Forex pair quotation. Okay, it is the currency that appears second in a Forex pair quotation. So that's why you can see here the euro appears first because it is the base currency, and the USD appears second because it is the quote currency. Good. Let's move on. Now, when we deal in the FX market, that is the Forex market. So if anytime I say FX, I'm talking about the Forex market. So anytime we deal in the Forex market, please mute yourselves. Okay. All right. So anytime we deal in the FX market, one currency is always quoted in relation to another. One currency is always quoted in relation to another. Now, since we are buying one while selling the other, somebody joined the meeting and I'm admitting them, so don't be offended. Anytime you hear that my voice pause, I'm admitting somebody into the meeting. So, as I was saying, anytime we are dealing in the FX market, one currency is always quoted in relation to another because we are buying one whilst we are selling the other one. This is the reason why one is always quoted in relation to the other. So in this case, for the example we are seeing here on Euro USD, USD is being quoted in relation to the base currency, which is the euro. Now, quote currency is sometimes referred to as the counter currency. Okay, the quote currency. So in this case, the US dollar here can be referred to as what? As a counter currency. The quote currency has its own price, always displayed on the chart. Okay, always we have the quote price, the price of the quote currency always displayed on what? On the chart. Now let me give you a scenario. Okay, so for example, let's say that we want to buy Euro USD. Okay, where euro is the base currency as I've shown you here. All right, and USD is the quote currency at a price of, let me see the current price here. Let me bring the chart back. Okay, so here the current price is 1.07505. Okay, so let's say that we are buying Euro USD, where euro is the base currency and US dollar is the quote currency, at a price of 1.0750. Okay, good. Now, what this means is that you are buying a single euro. Okay, listen to this very well. You are buying 1 euro or a single euro. Now, to buy that euro, you need 1.07498, which is the current price here of the United States dollar, to be able to acquire 1 euro. Okay, this is why we are saying we are quoting the United States dollar in relation to what? To the euro. So the price of the US dollar is used to what? To quote the euro. So if I need 1 euro right now, I need to what? To pay 1.07498 euros. Dollars to acquire 1 euro. All right. Now, when you are selling, okay, that's what I want to say. When you are selling Euro USD at the same price which we have here, okay, so let's say currently the price is 1.0749, okay, so let's say we are selling euro at that price. What is going to happen is that the quotation is going to read in this manner. That is, a seller will get 1.0792. I'm talking about this quote here on the chart here. Okay, a seller is going to what? Is going to get that quote or that price when he sells 1 euro. Okay, so that means the person has made a profit, because you are selling 1 euro and you are getting 1.0748 dollars on it. So you buy at discount, you sell at premium. I'll talk about that more when we get into the this thing. When we get further into the lesson. All right. So there is this thing that you need to understand. Why do we call this quotation pairs or pair of currency? Okay, now this is the reason why why you are buying one. It means simultaneously you are selling the other one. Okay, so if you are buying euro, it means simultaneously the US dollar is also being sold. Okay, let me explain. So let me put it this way. Why the simultaneous movement in market? Let me put it that way, as like a title for you. Then I explain. Let me admit this person. All right. So please.
My counselor. Yeah.
All right. So let's continue. A lot of people ask me, okay, anytime I tell them about this, why the, anytime I tell them that in the forex market we deal with what? We deal with quotation pairs. They always ask me why the quotation. Okay, please mute yourself. All right, so a lot of people ask me why are the forex quotations stated as pairs. All right, now this is due to the fact that investors are buying and selling currencies simultaneously. So whilst someone is buying, there is another person also selling at the same time. It's because that person is selling, that's why you have the ability and capability to buy. If there is no seller in the market, there will be no buyer. All right. So somebody was asked me this question, I think 2 days ago also, that why is it always that there should be a seller or a buyer in the market? And I said yes. Let's say, for instance, I go to science market. For those of you in the University of Cape Coast, let's say you go to the science market, okay, and you want to buy plantain. You go to the market and you don't see a plantain seller. Will you buy the plantain? The answer is no. So if you are buying something, it means there is somebody at the other side of the screen that you cannot see who is willing to sell that thing at that price. This is why you are able to place that buy order or that sell order. So there is something we call simultaneous movement in the market, and this is the reason why there is quotation pairs or forex pairs or quotations are in pairs. All right. Now let me give more realistic forex like example. So let's say if a buyer longs, when I say longs, longs means that buy. Okay, so as we continue, when we look at terminologies, you understand what we mean by longing and shorting. So if you are somebody who takes signals from others, you hear they say short this pair or long this pair. Okay, it means sell this pair or buy this pair. All right. So if a buyer longs Euro USD, he is basically buying the euros, okay, and selling the dollars at the same time. So he's using his dollars to go and buy somebody's euros. That's why they say selling the dollars at the same time. All right. That's why we have the simultaneous movement in the market. All right. Now we buy a pair when we think that the base currency will increase in value. So for instance here, if I feel euro will gain more value than the United States dollar, then if I have US dollar, I'll use that dollar to buy euros and wait for it to increase in price. Once it increases in price, I will sell it off. All right, let's continue. So as I was saying, when I want to buy euro, it means that I'm going to be using my United States dollar to get the euros. This is why we call it simultaneous trading or simultaneous movement in the market. Now, if we are selling a pair, okay, then it means that we are feeling that the base currency will decrease in value against the quote currency. What we mean here is that if we take this Euro USD we are seeing on the chart, for instance, if I feel like the price of this asset is going to continue to drop in this manner, then I'm going to short the market or I'm going to sell. When I do that, it means I'm saying that the value of the euros is going to drop against the United States dollar. That is what I am saying. All right. So please take note of that. Note, okay, note this. The base currency is always stronger than the quote currency. Listen very well. The base currency is always stronger than the quote currency. Both technical and fundamentals depends on what is happening to the base currency. So in the market, whatsoever news is affecting the base currency, which we said is the first quoted currency here. Please, sorry about the noise coming from the background. Here, my office is on campus, so that is why you are hearing the noise from there. Casford people are doing their morale. All right, I think they are gone now. So let's continue. Okay, so now technical, as I explained in the previous, we talk about technical analysis. That is mostly all we are going to be focusing on more in this course. But the fundamental analysis has to do with what news trading. Okay, so both news and technical analysis affect or depends on what happens to the base currency, right? Whether it is appreciating in price or depreciating in price. All right, so let's look at the key points in this lesson. Let's look at the key points in this lesson. Okay, so what are the key points that we take in this, or we can take from this lesson? All right, so let's look at the key points that we can take from this lesson. Okay, one, Forex market is a global marketplace for trading currency. That is the first key point. The Forex market is a global marketplace for trading currencies. Now, participants in the Forex market basically buy and sells a currency. That is what they do. Now, the FX market is the largest and the most liquid financial market in the world. And the two main levels of the Forex market are the interbank markets and the over-the-counter market. That is the OTC. Okay, because I'm saying over the counter. Okay, so these are the two main levels of the FX market: over the counter uh, market and the interbanks market. That's why I was telling you that forex trading is more like uh, um, more controlled by the funds of the big institutions like the banks, the hedge funds, and so on and so forth. Okay, now the main participants of this market include the international banks, the investment management firms, the central banks, the retail traders, and so on and so forth. There are many, but these are few of them that I have just mentioned. Okay. Now, before I talk about the last thing, okay, for today's lesson, okay, yeah, that'll be the last thing for today's lesson. I would like to take questions so far. This time, this is how I am doing the teaching. After some amount of teaching, I would like to take questions before I move on. So if you have any question, you can unmute yourself and ask your question, or you can just type it in the chat and I'll answer you. So I'm waiting for your questions. Mm. Okay, I think bless, you've raised your hand. So unmute yourself and ask your question. Just tap on your microphone to unmute. Can you explain the simultaneous trading again? Simultaneous trading again, boss. Okay, no problem. So what we mean by the simultaneous trading, okay, is that look on the chart where my mouse is, okay, where the cursor is, okay. Now let me change from crosshair to the mouse. Okay. So you see where the mouse is. Good. So I'll take it again. I'm saying that if a buyer wants to buy, let's say, this particular asset called Euro USD, okay, he's basically buying the euros, and at the same time he's selling the US dollar as well. What do we mean by this? It means that you are using the dollar to buy the euro, and when you are using the dollar to buy the euro, it means you are selling the dollar to the person you are buying what? The euros from. This is why we call it a simultaneous what? Movement. Now if I want to buy uh, sorry, gold, okay, or let's take another pair. Let's say I want to buy let me go to Forex. Okay, so let's say I want to buy GBP USD. Okay, when I am buying the pair called GBP USD, it means that I am what? I am buying GBP, that is Great British Pounds, using the United States dollar. So it means I'm buying the Great British Pounds, whilst at the same time I'm selling the United States dollar. So whoever I'm buying the GBP from is also buying the USD from me with the what? With the Great British Pounds. So I buy from him, I give him dollar. He also buy the dollar from me with the pounds. So you are buying and selling simultaneously. Please, those who ask the question, is the explanation clear now? Please, if it is clear, let me know. Okay. Link up Junior say yes. Okay. All right. All right. Um, Eric and Emmanuel are in queue. Okay, so you can, Eric, you can ask your question. You can mute yourself and ask your question. Or Emmanuel, no, any of you can unmute yourself and ask your question.
Okay, sir. Um, if I've heard you well, we're talking about the simultaneously, which means that someone is buying the British pound and someone also is selling the USD.
Yes,
And you said that the base is always stronger than the quote.
yes.
So does the quote have effect on the base, or does the base has effect on the
Is the
quote?
is the base is the base that have the effect. So if you listen very well, um I said this. The base currency is always stronger than the quote currency. Both technical and fundamentals depends on what is happening to the base currency. So whatsoever is happening to the base currency affects the movement of price on that particular pair. So if there is
Okay.
news on the odds on the base currency, it affects the odds, the quote currency as well.
Okay. So I think the USD is a global currency that every country uses. Does it also have an effect on AUD if you are you are buying the AUD USD?
USD is a quote currency. Okay, they are quoting unless we have something like this. Okay, for instance, the AUD you are talking about is AUD. Yeah, we have the AUD USD. AUD USD. So in this case, AUD is what? Is the base currency. Okay, so any news affecting AUD will have effect on this code.
Okay. Okay. Okay.
But
That
if you have something like this one, USD, yeah, USD JPY. In this case, USD is the base currency. So any news having on this USD is having a very strong effect on JPY.
okay. Okay. So sometimes the news also can affect the pace.
Not can. The news affects the pair once it has to do with that pair, that quotation.
Okay. That is why every first month of every Friday of every month, and the non-firm payroll also affect the
Yes.
principal. All right. Okay.
Because whatsoever that news is doing to the base currency will surely have an effect on the chart.
All right. Okay. Thank you, sir.
You're welcome. Yeah, I think Emmanuel, you ask your question. Okay, so Eric,
Yeah, can you hear me?
yes, I can hear you.
Huh. Thank you, Prof. Prof, I want to ask you. Once I'm
Yeah,
talking about the base currency and the code currency. For instance,
yeah,
if there's a news that is affecting the euro, that the euro
yeah,
currency, and you are trading the euro USD and the USD JPY. Let me
yeah,
say the news is affecting the USD rather. It's affecting
yeah,
USD. Now you are trading euro USD and the USD JPY, and the news is maybe positive, which means
yeah.
that it will make the dollar maybe move up.
Gain strength.
Yeah, gain momentum. Will this
Yeah,
affect the? I know it will affect the euro USD JPY, but will
yeah,
it affect the euro USD too? Since the in the euro USD, the USD is not the base currency, but the
yeah,
code currency. Will that
yes.
one affect the euro USD too?
Well, uh, there are times it affects, but the reason why we say it doesn't affect is majority of the times the base currency has the power, the upper hand.
Okay.
Yeah, so you see that if you go the direction, if maybe let's say the news is positive and USD JPY is going up, you see Euro USD falling rather.
You
I
see,
get it.
Prof, come again, please.
For instance, if we take USD JPY now, and the
Mm.
news is positive on USD, it means USD is going to appreciate in price, so it's going to
Yeah,
affect price.
yeah.
Uh, Now, if it is Euro USD, if the
Mm-hmm.
news is positive, it means price is going to depreciate for Euro. Are you getting it? Hello? Okay, I think Eric's this the network.
Hello, Prof, can you hear me?
Yeah, I can hear you now.
And what I'm asking, per what you said, it means that if the news affect the USD, if you
Yeah,
buy the USD JPY, you cannot
yeah.
buy the Euro USD too.
So if you buy it, you lose. You should be rather selling it.
Okay, you should rather sell the Euro USD
Yes, because at that
and buy
time,
the base currency of the USD, no?
yes,
Okay.
that's why we say the fundamentals that are coming around, that are
Mm.
occurring on the base pairs, are always have a lot of effects.
Okay. Okay. All right. Thanks.
Welcome. Yeah, Clotte, Clotte. I hope that is the name. You can ask your question. You can unmute yourself and ask your question. You raised your hand. Okay, I think he's not hearing me. So let's continue. Let's look at the last thing and then we'll close for today. The video should be out latest by tomorrow. But if I get home and I'm not tired, I'll try and see if I can upload it today. Okay. All right. So let's look at the reasons why people trade the forex market. What triggers people? Okay. I know a lot of people will say, I want money, that's why I'm trading it. Or I want to master the skill, that's why I want to trade. But no, there is technical reasons to why people trade the forex market. Number one reason is that there is a lot of what? Trade volumes. There is a lot of trade volumes. Now, the forex market is the most liquid market. The liquid we are talking about here is cash. Okay, cash flow. All right. So during the course of the lesson, you'll be hearing me talk about certain things like liquidity. Okay, so areas of liquidity are areas of money. Those are the areas the money is. Okay, all right. Now, liquidity is how easy it is to buy and sell an asset without affecting its price. All right. So you can easily buy an asset or sell an asset without affecting its price when there is enough liquidity. There is a uh, there's always a buyer and there's always a seller in the currency market. This is why you can place instant executions without having to go through pending orders, and still your orders will trigger. Okay, so there is a buyer when you want to sell instantly, and there is a seller when you want to buy instantly. Okay, so that is the number one reason. Trade volume, liquidity is the number one reason why people trade in the currency market. Then reason number two is time of operation, the time that the market is operated. Now this market is opened 24/5 for the currency market. For the crypto market it is 24/7, and for the synthetic market too, it is 24/7. It is open 24 hours 7 days a week. All right. So the market is open 24 hours per day for 5 days. That is Monday to Friday. Okay, but like it opens, Asia opens in Sunday evening, okay, around 9 going. Then runs to what? To Friday evening. So the market will close today. Very soon the market will close. And we have to wait till Sunday for it to open. That's for the currency market. You can trade from anywhere in the world as long as you have the time. Okay, so even if you are in Asia, that's why we have the Asian session. If you are in London, we have the London session. If you are in Frankfurt, we have the Frankfurt session. If you are in what? UK, we have the London session. If you are in the US, we have the New York session. So we will look at those things. We look at the sessions as we move on. Then the number three, okay, the third and last reason is leverage. Leverage. Very, very important. We'll be looking at leverage into details next week. Okay. So I think by next week we should be done with all the important introductory part of the course. And then now next 2 weeks we now start to dive into the chart. Okay. Um Leverage, I'll put it this way, that it is like an added money, okay, or a borrowed money that the broker is giving to you to trade with, but you cannot, it's not withdrawable or it's not added to your hot, to your equity, okay. So let me explain further. So another reason people are attracted to the forex market than other financial markets is leverage. In forex, you get higher leverage than in the stock markets. Leverage is a double-edged sword. Please, when you write this point down, underline double-edged sword. Hmm? Leverage is a double-edged sword. That is, it can amplify both profits and losses. So, as much as leverage can give you more profit, okay, the same way it can also give you more losses. So you have to take note of that when you are selecting leverage. Well, when you are selecting, when you are creating accounts with dynamic leverages, as a beginner, your leverage should always be maximum 1:200. Okay, but when you become experienced, you can even trade with one. For me these days, I select the highest leverage. If it is 1:10,000 crowd, select it, give me that plenty money so that I can, because the way I analyze, I risk very, very little. So by the time you hit my stop loss, I'm losing some more. But when I'm killing you, the broker, very, very heavily. That is how trading should be. All right. Now, I will elaborate more on this leverage in the next few lessons. So this is just an introductory part based on the three reasons why people trade forex. So this brings us to the end of um, today's lesson. So on Thursday, okay, we'll meet. The next meeting is on Thursday. On Thursday, I will meet you guys in class again. But before we go, if you have any question, please you can unmute yourself and ask your question before we end the meeting. Thank you. All right. So
Hello,
since there
Prof.
is, yeah, okay, yeah, hello.
Please, where can we get the news update?
Yes, I'll be coming there. I saw that somebody asked, but I'll be teaching you. So I'll be teaching you about how to get your news updates. Okay.
Okay, thank
So
you.
step by step, you get there.
Okay.
Is there any other question? All right. So if there's no other question, I wish you all a happy weekend. I love you.